Hey, everybody. Welcome to another Free Real Estate Advice Friday. This is Craig Metz. This is episode 37. And wanted to talk about a few things today. We talk a little bit about the market and what's going on out there, as I do pretty much every week. And I want to talk a little bit about selling today, because definitely still a seller's market, but we are definitely seeing some changes. So we can talk about those. The biggest question that every real estate gets more than any other question is, how is the market doing? So I try to answer that question every week, because I probably get asked that question 5 times a week. So I want to talk a little bit about that. And I want to talk about, even though we are definitely still in a seller's market, we're going to be in a seller's market indefinitely. I don't see any reason to think that's going to change. And there's really two main factors on the micro level. And then, of course, we have the macro factors like inflation and interest rates and everything else. But on the micro level, like really what's kind of keeping the market where it is the main thing is that, particularly here in Hunterdon County, that, as well as most places, the inventory is just super low. So until we solve that problem in and of itself, it's really going to be a seller's market here on out. Obviously, interest rates have gone up significantly. Let me check what they're at today. And they do still fluctuate quite a bit. So you'll definitely see. I mean, you can see half a point from day to day for sure. But for the most part, they're obviously higher than they've been over the past couple of years. I think when I did this last year, I think we were at 5.2, or I'm sorry, last week we were at 5.2, and we're somewhere in that range now. Looks like national average on 30-year fixed rate as of today is 5.6. According to one source. Let me check one more source real quick. Let's see. Okay, another source puts it at today 5.5, 5.6. So we're still in that range. It's been relatively flat. I'm looking at the calendar here. So June 15th, it kind of spiked. 30-year mortgage on June 15th was about 5.95. 5.96 technically. But it's kind of gotten down quite a bit since then. It came down to a low of, and again, these are national averages, 5.369 as of July 5th. And we had a little bit of a spike there over the next week. And then we're coming back down again. So July 15th, that's today, 5.634. So again, that's the national average. Obviously, this varies a little bit based on creditworthiness and program you choose and points and everything else, but about 5.6. So again, to remind everyone, historically, we know that the historic average is somewhere in the neighborhood of 8-9%. So, we get a lot of reactive buyers. They say, oh my God, mortgage rates are so far up. We don't want to buy when the mortgage rates are high like this. They are high in terms of the last few years. They are not high historically. They are still quite low. And if if you're in a situation where you need to move, you've decided it's time to upgrade, it's time to downgrade, whatever the situation is that's necessitating a move, that should not scare you away. Now, I will say this. I'm definitely not necessarily a risk averse person. I come from the mindset, especially when it comes to primary residence, of, if you find the right opportunity, you find the house that's perfect for you, and you have an opportunity to get in there, you've talked with your agent, you have a pathway in a multi-offer situation, and the agent says something that I say to my clients all the time: I can get you this house, but here's what you would need to do to be aggressive and get this house. If that's your situation, then 5.6 versus 3%, speculating within a 2.6% mortgage rate, that should not deter you. And I think that it's going to deter the opportunist buyer, the person that doesn't need to upgrade, but they see the opportunity because the rates are 2.8%. I totally get that. That's a different scenario. But if you're in a situation where you are in a need of an upgrade or need to downgrade, then this this should not deter you. And it's, you have to look at something that we don't own homes typically. I mean, sometimes people do, but we don't typically own homes for a year or two. We own them, I think the average is 6 years, but I mean, hopefully, in a lot of situations, it's going to be longer. Like the house I'm currently living in, I plan to be there for another 20 years, I would think. We've been there for 7 years. Barring I'm in real estate. So obviously I see houses all the time and I see all kinds of opportunities and stuff I want. But I've been doing this full time for over 3 years now. And I always comment to my wife, we've been in our house for 7 years. I always comment to my wife, I've yet to find a house, and I've showed everything in proximity to where we live now. I've never found a house where I was like, oh man, if we could only switch to this house. There's been a few that were intriguing to me, but nothing that I would actually go through the effort to do all that. So if that's the situation with the next house you're buying, you shouldn't be worried about 2.6% interest rate increase. As I said last week, you're marrying the house, not the loan, not the rate. So there's always going to be opportunities to refinance. I don't know too many people that take out a 30-year mortgage unless they got one of those 2.8, 2.4 percentage ones. Then sure, they're not going to refinance. But most people throughout the life of their owning their house are going to refinance at some point. Sometimes you even want to refinance to take some cash out of the house, as we can expect. Even if you pay a high rate, your house is going to appreciate in value. You're going to have a line of credit available to you. Maybe you want to reduce down to a 15-year mortgage, which will also decrease your rates. So there's many different reasons that you refinance. And, most people with a 30-year mortgage are going to do it maybe multiple times. So that's why I say you marry the house. You can be in that house for 20 years and have 3 different mortgages on the house because of refinancing and maneuvering or whatever you need to do. You now have this big asset that makes these maneuvers available to you. So, the rate that you buy it for at day one is probably not going to be indicative of what you have towards the end of owning and possessing this house. Now, if you're the type of person that moves a lot and you think, I don't even know if we're going to be here for 2 years, that's a different story. But I mean, that's always going to be the story. Even if it was a good rate, you still have to cover your closing costs and everything to make that sensible. So, again, that rate shouldn't deter you. Here's the fact of the matter is it is deterring a certain subset of buyers who are in that, oh, well, rates are so low, so maybe we should think about making a move. Now those people are probably less interested. But I know me personally, I always look over my big board here. I have anywhere from 15 to 20 active buyers going at any time. And I'm looking up there now, and I would say maybe I've lost 3 or 4 that were those opportunistic buyers said, maybe this is the time to make a move because rates are so low. But other than that, everyone's still looking. Everyone has reasons they need to move, which is typically what we call a right size. It's a downsize or an upsize because it's time. They have family, the kids are getting a little bit older, they need a little more elbow room, and it's time to upgrade. And they're at a time in their life where they have the income and the rates are decent enough and there's opportunities popping up and they decide it's time. Or they're empty nesters and they need to downsize. They're tired of the bills, they're tired of the maintenance, and they want to downsize. Those people, that's going to happen in any market. So that never really goes away. Here's my advice to buyers. Number one, buyers, keep looking, take your shots. It is still relatively competitive out there. It is definitely calming down. We're seeing an average of, again, anecdotally speaking, here in Hunterdon County, I'm seeing anywhere from 2 to 5 offers on most listings, whereas, a year ago it was 5 to 15 would be pretty standard. So definitely, bringing everything down, that is definitely related to that interest rate and everything else. People are just getting a little less aggressive in maneuvering. There are new programs out there that I think are making things interesting. There are a lot of these programs where you essentially are buying with cash. Now you have to have the assets to back up this maneuver, but essentially what it is you're kind of getting your mortgage first and then finding a house. You're using all that money to go buy the house. That's becoming a very popular program because then you're essentially a cash buyer, gives you a big advantage. That comes at a cost, obviously. And like I said, you have to have the assets to back it up, but that is a thing that's happening. And I think it's making the offer process a little complicated because it just ends up putting more cash buyers out there. We are seeing less waivers. So people are sticking with their inspections, which I can't tell you how happy I am about that. I do not like waiving inspections for my own buyers. I don't like it on my listings. I don't like waiving inspections. I do not think it's a good idea. I understand this is people were looking to get creative, and if they have the money, that's fine. I just think it's a bad precedent in our industry, because it pressures people to do things that they would choose not to do otherwise. I've only put in over the past few years, I think I've only put in one offer where we waived inspections. It was a super competitive situation at a very high price point, and we didn't get it, by the way. But that was the only time that I had that conversation I've referenced many times on this broadcast of telling my buyer, I don't recommend that you do this, but if you don't do it, you probably won't get this house. So I am very happy to see that kind of going away. I hope it never comes back. I just don't think it's a good idea. I understand there are people in this world that can afford that and take on that risk, but it just makes for it adds an obstacle for most people can't afford to do that or shouldn't do it. It's not advisable to ever do that, even if you have the money. If you're just looking to not flush money down the toilet, it's not an advisable strategy. You should do your due diligence. It's even in the seller's best interest to let buyers do their due diligence. For an analogy, like let's say you're buying a used car and it's in my garage behind me. I got the garage door closed and the person comes up and says, I open up the garage. I say, here's the car. What do you think? And they say, oh, it looks good. Would you mind if I take it for a test drive? And I close the garage door and I say, that's, you want it or not? Give me an offer, make me an offer. And, I have a lot of other offers, so don't waste my time, but it's back there. Trust me, it's fine. We haven't had any issues with it. Good luck. That's obviously no one's going to do that. No one's going to take them up on that. Now people are doing it with houses, and we're talking the situation I was talking about. The house was over $1 million. There are plenty of things that could be issues there. So I hate it. I hope it goes away. It is starting to fade away a little bit, so that's very encouraging. But what I wanted to talk about mostly today was sellers. So here's what's going to be the challenge for both sellers and real estate agents in the coming months. So let's set the stage here. So first of all, it is still a seller's market. It is, as I said earlier, it is going to be a seller's market for as far as I can see. There is nothing, we're not going to see a sudden surge in inventory. And actually, we're coming up. It's summer, and I hate when people say, it's July 15th, summer's almost over. I don't like to think that way, but in terms of real estate, we always have to add 2 months to it. So anything that I, get my clients right now, it's not going to close till mid-September. So we're sneaking up on the end of the year. I basically have 3 months to get people in houses in 2022. So we are coming up on that. When that starts to happen, when we start hitting winter, inventory comes down seasonally. We haven't seen that uptick in inventory to get us out of the seller's market, and it's not going to happen anytime soon because we're coming up on the time where it starts to go down. And again, this is kind of what we experienced last winter, as it came down a little bit, and then actually December and January were actually historically very active. Again, I had talked about this in a previous broadcast that we saw quite a bit of activity in those months because I don't know what it is. Again, anecdotally speaking, I think there were that for a very long time, I was getting a lot of listings that were kind of our FOMO listings, fear of missing out on this crazy market. So there was this sudden surge towards December and January of December 2021 to January 2022 of people that were getting it on the market because they're like, oh my God, I don't want to miss out on this craziness. I want to get all the money I can for this house. We were thinking about making a move. Let's do it. And that time is come and gone. So, I think the people that are left selling are new sellers. They're not people that have been thinking about it, because the people that have been thinking about it and like, we should probably start to think about selling, they've done it because they wanted to get in on the market and they've done it. So the inventory just comes down. On the national level, there's just a housing shortage. It's just, I think Fannie Mae released this week that they estimate that the US is 4 million houses short of what demand calls for. So that's not going away. It's going to take us a while to dig out of that. So setting the stage, still a seller's market, 100% still a seller's market. That is not changing. However, the pressure that's on that seller's market. So what we've been used to in the past 2 years is this. This is the seller experience. I'm going to talk in terms of very moderate things, moderate price point, moderately updated house, something reasonable, not the nicest listing in town, just your standard, out here in Hunterdon County, standard 4-bedroom colonial, 550 on an acre of land, your very standard type of home. Over the past 2 years, if you had something like that and it didn't have any egregious things like no new updates, no kitchens or bathrooms were updated, there's carpeting, there's wallpaper. I'm not talking about those houses. That's a different story. I'm talking about the ones that are like move-in ready, maybe not 100% updated, but maybe 85% updated. A standard house that most people would come and say, this is a very nice house. Those types of houses over the past 2 years just fly off the shelf. 10 to 20 offers, generally multiple offers, people waiving things, appraisal, inspection, et cetera, almost always bidding over asking price. I mean, if you're going to get 5 to 15 offers, you can expect that someone's going to bid over the asking price. And typically that's what's happened. So is that still happening? Yeah, it is. I bid on over the past 2 weeks, I put out 3 bids, and they were all multiple offers, but they were all under 5 offers, which again, over the scale of the last 2 years, that's actually very reasonable. And I can kind of operate in that range a lot more comfortably than constantly pumping out offers when there's 15 to 20 offers on every single house. It's exhausting for real estate agents. So how is this going to change? So we go from that we go to the current market, which is a slightly tamped down version of that. So instead of the 15 offers, we're getting 5. No one's waiving anything anymore, which I actually think is a good thing. Days on market is going to go up. It's going to be a longer days on market. One of the funny things that's come out of this market that I get all the time from my buyers is, hey, Craig, we wanted to go look at this house. I see it's been on the market for 18 days. What do you think's wrong with it? Nothing. There's nothing wrong with that house. For just whatever reason, they haven't found a buyer in 2 weeks. But historically speaking, that means nothing. That's a blip on the radar. But that's the mindset of the average buyer. So when that happens and you have a listing and it hits that mark and then starts getting deeper and deeper, 15, 16, 30, 40 days on market. And strictly talking residential here, commercial is a whole nother story. But residential, people look at the house and they're like, oh, I don't know, this thing's been on the market for a month. There's got to be something wrong with it. Probably not, unless it's listed in the listing. And I will tell you, as soon as you ask me about it, I'll say, oh, you know what, there is an issue here. It's got a structural issue or whatever. Failed septic, or it's as is, or whatever the case may be, not in a great neighborhood, weird neighbors, they got a parking lot in their backyard for the business next door, whatever, like those kind of things. Yeah, that's why it's been on the market so long. And if you want to go look at it and think you can deal with that thing, sure. And it would be expected that would be on the market for 30 days. But I think a lot of, there's 2 things that can get you in that sort of situation as a seller. The first thing that I can't preach this enough. I know the market's good, and I know you might have, there's a price that I'm going to tell you that I think you can sell your house for, which is a fair market value price. And essentially, when we do that, a lot of times we know it's probably going to be bid over, especially if it's priced correctly in a way that is going to entice enough people to come look at it, fall in love with it, and make an offer. And the difference between getting it at listing price or getting it above listing price is getting as many people in the door as possible that are going to say, I got to have this house. And they look around and there's other people showing up for the next showing. And they're like, there's a lot of people interested in this house. We have to make a serious offer. That's how you get over asking price. What typically happens is, let's say you have a colonial in Hunterdon County, you're selling for $599. That would be a reasonable price. It would be a good price. Everyone would be happy. But your neighbors down the street, they also listed their house for $599 and they sold it for $650. So what happens here is sellers will make the decision to say, well, that one sold for $650. And I know they had multiple offers. So let's start at $650 or maybe say $640 or something. They're going for that price. But keep in mind that those people didn't list at $650 and get $650. They listed at $599 and got $650. And your expectation should be no different. If it is different, you are inevitably going to have a different selling experience than they had, because you're already going to knock out anyone that so there's many different buyers you're going to knock out. You're going to knock out the buyers that come look at your house at $599 and say, yeah, $599, we can do $599. We probably could do $610, $620. And they go to the house and they look at it like, oh, it's perfect. It's got everything. Those people typically, if really pressed, can come up with the 650 they didn't think they could come up with. I could tell you right now, the house that I live in now was above. This is 7 years ago, totally different market. But, we were looking in the 450 range. And we looked at a bunch of houses, and they all, like, 450 is a tough price point in this area for a 4-bedroom house, because it's probably going to, and this is 7 years ago again, but at that time it was tough because everything we looked at had something like a palpable thing that was holding us back from saying, ooh, this one's got concerns. We looked at one house that was listed for $499,900. And it was perfect. The yard was perfect. The structure was perfect. The flow was perfect. As soon as we stepped onto the deck to overlook the backyard, we're like, this is the house. Nothing else matters at this point. This is the house. But we said to ourselves, well, we were looking at 450. This is 500. What are we going to do? Well, listen, there are things you can do. Like, if you're that close, I mean, you're talking about 10%. Have a conversation with your lender, relatives, whatever you have available to you. We don't all have relatives we can go to, but some of us do. And you don't always have wiggle room with your lender. A lot of times people have a presupposed price limitation they put on themselves, but the lender's, telling, the realtor or whatever, oh, no, they can go up to 6 if they want. They don't have to stay at 550. So those types of things. And you have a conversation with your clients, very typical conversation, where I say something to the effect of, listen, I talked to your lender, and for every additional 10 grand you borrow, it's going to be about another $45 a month on your mortgage payment. So think of it that way. So you're basically telling people, if you want to go up 50 grand, then go ahead and add, $225 to your mortgage payment. Can you afford another $225 a month? And usually they're like, yeah, that's not a big deal. And I'm like, that's the difference. We're not talking about 50 grand cash. Go out and find me another 50 grand cash. Most people can't pull that off. But if I say, could you afford another $225 a month? For me, cancel my DirecTV. There you go. There's my $225 a month. That's a different story, right? So you want to get those $599 people in the house. So they go in there, they fall in love, and they come out and they start calling relatives, and they start calling their lender, and they see what they can put together. And guess what? They can all put it together for the most part. So you don't want to lose those people. So again, you listed at $599, you found those people, they looked around, they talked to me, the listing agent, and they said, hey, how many offers? Oh, I'm told there's, 5 offers coming in. I'm already holding 6. That's 11. So, I would get your offer in pretty quick, and I would make it pretty strong. That's when they start making those maneuvers. If you had listed at 650, they would have never come, because they've already convinced themselves they can't afford 650. So problem number one in this market is, and most markets, but definitely this market, is overpricing. Do not overprice. Listen to your realtor. And if the realtor is not me, I'm only saying that because I know how I do it. But if the realtor is not me, make sure you understand how they came up with their price. Because here's the other problem is, some realtors will just throw a price at you that is going to make you say, wow, yeah, no, I want 650. But that realtor probably has a pretty good idea that that's unlikely. That is a strategy that some realtors do because they want your listing. They want your signature on that thing. And you're saying, hey, yeah, I'll get you 650 all day. In the back of their head, they're saying, I don't think I can get 650 for this. That's a problem. That's not a good start to a business relationship. That's for sure. And it's going to lead to some painful conversations in about a month when no one's biting at 650. So I don't operate that way. It's the exact talk that we're having right now. Is I'm not going to tell you to list at 650 when I know I can't get you 650. I'm going to explain to you why I'm going to price at 599. I'm going to show you how I came up with that price. I'm literally going to hand you the houses I compared it to and the reason that we're doing 599, even though we both know the neighbor's house sold for 650 and we want you to get 650, we're still going to list at 599. that initial price is so important. When you see how many houses are going for over asking, it's that initial price that's important. And I'm seeing it more and more because kind of the point of this is how has the seller experience changed? So again, everything's lighter, right? Everything, the activity is down. So you can't necessarily expect the world. So put it out at $599, get that buzz built up, get people to come in the house, fall in love with it, and make you an offer that you will like. But gone are the days where everyone's just going to bid like crazy. That has kind of gone away. Days on market. Reasonable expectation that your house is going to sell within 2 weeks. Yes. I think for the most part, the answer to that is, yeah, that's a reasonable expectation because, part of my new routine as a buying agent is I have to call every listing I want to show and say, is this house still available? Because they are selling so fast that you can't rely on the data on the MLS being accurate. It might be dated because things are happening so fast. So I always have to call and say, hey, is there an offer deadline coming up? Do you have offers currently? Are you in attorney review already? You have to have those kind of conversations because everything moves very quickly. However, we are seeing that it's calming down. So we're getting things that sit on the market for a little bit. We are seeing price drops. We are seeing more price drops now than we've seen in the past 2 years. For the longest time, price drops were absolutely a rarity. 3 years ago, price drops happened all the time. So price drops typically, sometimes they're 2 weeks, depending on how urgent the seller is, but I would say pretty standard rules about monthly. So every 30 days it's on the market, there'll be a pretty significant price drop. Because at that point, based on listing activity and everything else, it's probably a good time to recognize the fact that you are overpriced. And again, that's a strategic conversation. When that 30 days comes up, if we haven't already predetermined a price drop schedule, then I'm going to have a conversation with my sellers and say, all right, you've been on the market for 30 days. We had a little bit of activity initially. It's definitely quieted down. We're not getting any showings anymore. If you're not getting showings anymore, you probably have to drop your price. It's probably the only thing. I'm oversimplifying this concept. If you were my client, I would have a much more engaged conversation about what that should look like. And it's based on the activity for your particular house. We have all the reports and everything of all the showings and requests. And usually I have an idea of how many calls I'm getting on the house. So obviously it's a little more nuanced than that, but at the base level, if you're not getting the activity after 30 days, it's time to drop the price. I could point to many houses locally that my clients like and would like to buy, but they won't even go there because of the listing price. And I know that house is not worth it. This happens now. This is a thing. I've had some of my own listings were just overpriced, and it wasn't because I didn't know. I did know. I knew from the drop that they were overpriced, and I had that talk with clients, and the clients just said, "No, we don't want to do that. It's not. We don't want to drop the price anymore." And that part of the thing of working with a professional that's engaged is going to give you numbers and data points and strategic advice, and someone who's doing it at a high level, which not for nothing, I would say I'm doing this at a high level. You should listen to them. You really should. They know what they're talking about. Any decent realtor, and I could rattle off 20 realtors in this area that are great realtors. If they tell you something, they're not just telling you to just get a transaction, because hopefully if they're a good realtor, they want to build a relationship with you. They want to be your trusted realtor. You don't get trust by just throwing things at them to sell the house. You get trust by showing them, here's the data, here's the decision I think you need to make if you're serious about selling this house. And on the outset, that they look back at things and say, Craig really got us here. That was a good decision. And now we sold the house and we're happy with what we got. Maybe it wasn't what you expected on day one, but you're happy with the outcome. So, don't overprice. Expect that it might sit on the market a little bit longer than it has been previously. Be ready to drop prices. It's a slightly different version of everything we've been experiencing for the past 2 years. It's definitely still all the cards are with the sellers. It's just that we're going to have this drop off in activity a little bit. And that lag is interesting because I know all of us realtors are just used to a way of operating over the past 2 years, calling every listing agent, How many offers do you have? How strong are they? Do your sellers have any preferences? All the strategy that has to go into making an offer, writing up the offer, putting in any waivers that you're doing, talking to your clients about appraisal gaps. It's a lot. And that's the way we operate nowadays. Well, now that the activity has come down, we should accordingly be making some changes. But it's hard, right? So we had all this momentum and this hyperactive market. And now that things are calming down, we have to make adjustments to our business and how we approach things. It's challenging for realtors, but it's obviously something that we see every day, and we're getting data points every day, and we're constantly checking the market and rates and everything else. And we have this professional understanding of the real estate industry and what's going on and how we make strategic adjustments. But for sellers, it isn't like that. You only sell a house, for some people every 20 years. And you're not as locked into that. And your expectation is just what you've been hearing. But most likely what you've been hearing is already dated information in terms of this market. It moves so fast that the information you're hearing could, in fact, not be relevant anymore. Or it could not be specific to your location. If you hear something on, say, CNBC, they could be talking about Charleston, South Carolina, and the crazy things they're seeing. And people just take that information on some level and apply it to their situation, when if you had involved me in that conversation and say, well, hold on a second, that's like literally one of the hottest markets in the country. We are in Hunterdon County. It's definitely not like that here. And let me tell you why. Let me give you some actual Hunterdon County specific information here. So there's going to be an adjustment period for sellers. The good news for sellers is the appraisal situation. So appraisals are going to have this lag, right? So appraisals generally, I think they try to stay within 6 months. Don't quote me on that. I'm not an appraiser. But they try to stay within 6 months on the comparable properties. So, as the market starts to come down, the appraisals are still there from the prior 6 months. And I think if they have to, they will even go back further. So you're going to be going back into the peak of all this. So if you're a seller and someone has bid crazy on your property, you want it to appraise. That is in everyone's best interest for it to appraise. If it doesn't appraise, hopefully you got an offer where they had some protection in place, but it just puts a little more pressure on the whole transaction. If it appraises, it's just like one less thing to worry about. So we're going to see that, appraisals are still going to be hearkening back to the market 6 months to a year ago when prices were higher. So most houses are going to appraise. I will say over the past, 2-3 years, we'll do the whole 3 years that I've been doing this full time. I've had 2 houses not appraise in my entire career. I've had 2 houses not appraise. I can tell you exactly what houses they were. Both of them were actually pretty surprising. But through all this crazy market over the past 2 years with people bidding way over asking, 85, 100 grand, 200 grand over asking, they all appraised. They all appraised to our offer price, except 2 exceptions. One of them was a house that was high 3s. That was a surprising one. And it was actually very easy to resolve because it was a pretty balanced market at the time. So buyer and seller both came to the table, said, hey, we'll split the difference. No harm, no foul. And the transaction proceeded relatively easily. The other one was a different situation, but for sellers who are concerned about appraisal gaps, because then you start to worry about qualifications of your buyers and if they can actually cover it, if they have the cash, whatever the case may be, whatever you decided on how to cover that appraisal gap. And that's a whole nother story. Feel free to ask me any questions about that if you have any. But for sellers, you don't really want to have to worry about that. So sellers currently are going to benefit from people will be able to basically bid whatever they want on your property, and it most likely will appraise again. Don't quote me on this. There are always exceptions, but generally speaking, I think that's a fair assessment. So I see a lot of people on here. Please feel free to ask any questions, any real estate questions whatsoever. If I can't answer it, I'll definitely let you know. But any sort of high level real estate questions, any questions about the market, selling, buying, investment properties, whatever you want. We just had a discussion here in the office. We have an investment club here. One of the many great things about our particular group here at Keller Williams, not just Keller Williams, the brokerage, but our particular group. So I'm sitting in Clinton, New Jersey right now in my brokerage, but we have, I don't even know how many we're up to. I think we have 15 or 16 offices. So we have a large ownership group, and within that group, we have different meetings available to us. And one of them is a investor mastermind. And, there's a lot of opportunities in the investment market now. And I think the expectation on the investment market, so, you're talking about destination homes, second homes, multifamilies, single family flips, single family buy and hold, all these different types of investments, they are something that's probably ripe to keep an eye on if you're looking for an investment opportunity. I know I have a few clients that are looking now at some investment opportunities. As people that have accumulated wealth over their lives, typically about my age and maybe a little bit older. I'm 43. I'm 40. I have to think about that. I'm 42. But typically around my age is when people start kind of accumulating investment portfolios. But as the stock market, as we know, is kind of leveling off, 401ks are a little less appealing right now. People are maneuvering to kind of stop speculating on the market at this time. One of the first places that people who have accumulated wealth go to recover some of their liquid funds is sell off some of their investment properties that they've had for a while. And, maybe they're just tired of dealing with properties. Maybe they're upgrading. A lot of people start by investing in single families and they move on to multi-families or even, multi-unit things like 40-unit apartment buildings and stuff like that. And they just don't want to hold single family homes anymore. There's probably a reasonable expectation that over the next, 2 years, however long our current stock market situation is going to last, people will start to sell those homes off, and those opportunities will be made available to people that are looking to get involved in that. Come in, make your renovations to the home and get it back up for rent. Again, we know there's a huge housing shortage, so there's no lack of tenants out there. But people are always kind of maneuvering in that investment space. And when the market comes down, people say, oh, you know what, I need to get some liquid cash. Let me sell off that single property I have. I don't want to deal with that one anymore. Doesn't necessarily mean there's anything wrong with it. It's just, their personal situation says, yeah, we had a good run and it's time to sell that particular property. People that deal in multi-door situations where they're, let's say they have 10 investment properties, which is really not that uncommon. They're willing to trade those things like baseball cards. There's just always situations where it started off as a very good situation. Then, for whatever reason, they're trying to buy something bigger or whatever. They want to kind of liquidate some stuff and then make a bigger play. Those opportunities become available. And a lot of times they're really good opportunities. So that is a market that I think we'll start to see more and more opportunities in the coming years. But also, I talked last week, I think it was last week, about becoming a real estate agent. That's one of the things that I'll definitely plug for our ownership group, is that we have all these like really great, so people telling their personal stories about how they did their investment properties and, how they did their lending and all the mechanics and, what they're seeing that's working, what they're seeing that's not working, risks, all that kind of stuff. And we have some very high-end investors in our group. So, that's, I think, what most of us real estate agents are kind of looking to always have a hand in. We just get exposed to a lot of opportunities. So, passive income is always good. And maybe it's not truly passive if you're a landlord, but there are also, real estate syndication deals and things like that are, essentially passive income. So, all right. Well, that's pretty much it. Quite a few of you today. So thank you for all those who watched. As always, if you have any questions, you probably have another minute or so to post them. And I invite any and all real estate questions, general or specific or whatever the case may be. I'll be doing these mostly every Friday. The summer gets a little tricky because I do actually try to take Fridays off. So I think it was 2 weeks ago, I didn't do this broadcast because I was on vacation with my family, and I actually meant to, and I just kind of got sucked into vacation, which nothing wrong with that. But if you do have any topics that you'd like me to discuss, you have a couple minutes now to do it. But always, you can always message me in between episodes and say, hey, Craig, would you mind commenting on this week? And I'm happy to do that. Gotten plenty of it over the few years I've been doing this. So yeah, any general questions or Hunterdon County questions or Somerset or Middlesex or Ocean County or Monmouth or, Union or anything like that. Any guests you'd like to have, any businesses you'd like to plug, local businesses are always welcome. I shouldn't even say local businesses. I should say small business, because there's so many online businesses now. And if, you're a small business owner that operates online, I'm happy to take you too. But I'm always trying to have businesses on here. If you know anyone that needs some promotion of their business, have them on. But that's pretty much it for this week. If there's no other questions, hope you're all doing well. Stay healthy, enjoy some sun, and let me know if there's anything I can do for you ever. Okay. All right. I'll see you all next week. Take care.